All right. Hello, everyone, to the first Smarter Web live stream. We've done a number of Twitter Spaces before, and figured we might as well do this as a live stream and have the sort of podcast format. So it's been a while, Andrew, since we've done a session, the two of us, and there's been a lot that has happened in the last month or so. So I made note of. Let's see. So let's go through kind of what has happened, and then we can talk about all the developments that have occurred in the last month. So a couple weeks ago, we announced our intention to uplist to the London Stock Exchange, going from the Aquis market to LSE main market. Then a little after that, we released the official prospectus detailing that move and the company's full details. Very recently, we bought 10 Bitcoin. So we have resumed Bitcoin buying after a couple months of very tough conditions in the market. And then I also think another notable thing that has happened over the last month is Michael Saylor saying quite directly on a podcast that they have no intention of launching products in the UK, but that it's a great opportunity for whichever Bitcoin treasury company is in position to do that. So in my mind, that's probably the most eventful month that Smarter Web has had since maybe last summer. And I think we will start by talking about each of those items. But yeah, any thoughts, anything else that I missed that you think has also been going on, or any thoughts there?
I think you covered most of the main ones. There are other things as well, but they're certainly the main ones. And if we get time, we can touch on some of the other things. I think for me and you and the whole team, it's been really nice that we can actually talk about some things. Because we started the uplisting project many months ago. So much work's gone into it because it's a very involved process. And there isn't certainty until the day that you uplist, actually. But we're very close to almost certainty, and it's really hard for everyone when you can't say certain things, because as everyone knows, we believe in transparency and keeping our shareholders informed. But we're not allowed to say certain things until we're allowed to say them. So yeah, I feel like, don't know about you, Jesse, but for me, I feel like a weight's been lifted off my shoulders with that one, that I'm actually allowed to talk about it. And, everyone was expecting it. But at least now they know, what's officially been released by the company.
Yeah, I think for quite a while there, especially towards the end, it was difficult for you to field all these questions about when is that happening, and little did folks know that you had been up to your eyeballs in it for months, and we were very close to being able to talk about it, but weren't able to until now.
The thing that's been great as well is two things really, two different sides of it. Is it's been nice seeing the sentiment and the support come back into our stock. Obviously, when you're a Bitcoin treasury company, there's going to be good times and bad times. The volatility is what makes the model possible to a degree. So that's been nice seeing the sentiment and the support come back in. It's tough for the shareholders when you're trading below a 1M NAV, but it's also tough for the company that's slogging their guts out every single day. But then the other thing that's really cool and above my expectations, to be fair, at this point in the game, is to see the number of calls and meeting requests that we're getting from both the UK and internationally. Everyone seems to be really supportive about what we're doing, genuinely excited about it. And there's obviously benefits that come from that as we progress from here for the next couple of weeks and months.
Yeah, I think that's right. It has been from our perspective, just kind of to share with folks out there, for quite some time, we've had the hypothesis that Bitcoin treasury companies will be subject to market conditions, and sentiment will shift between enthusiasm for Bitcoin and greed for how do you get more Bitcoin. And in our view, Bitcoin treasury companies offer the best solution to that question. That state of enthusiasm and a state of bleak lack of enthusiasm, or people thinking that maybe it's over, or maybe it can't work, and that makes things hard when MNAV conditions come down to 1 or below. Granted, there are still things you can do, and I've mentioned already that elsewhere that we are excited about the things that we can do under 1x MNAV. However, we haven't been able to do them because of the uplisting process and the sort of regulatory requirements on pausing certain activities. And so, in a weird way, if we get a sub 1x MNAV conditions again, I'm a little excited about what we can do to deliver shareholder value when that happens. But also wouldn't be the worst thing if we don't have those conditions again.
The most important thing is that we've got options there, so obviously everyone's got their own ideas of what a Bitcoin treasury company should do, can do, will do, different stages, different geographies. But from our point of view, purely from a smarter web point of view in the UK, we've got options in all market conditions. And that's what we've said at all times. When you've got a very large growing balance sheet, you can do lots of things if you're in a sub 1, and you can do lots of things when you're above 1. We've also got the advantage that we've got liquidity. That Saturday Times article that came out last week showed people that don't follow our company how liquid we are as a stock. In the top 10 in the UK, that was on the buy side. I'm sure we're just out of the top 10 on the sell side. It would be unusual if you weren't in both sides. So, we've got liquidity, which allows us to have an ATM style facility. We've got demand from both retail and institutional. So that allows placing subscriptions, that sort of stuff, and a whole host of different things that you can do in all different market conditions. So, what you need as a company is you need the toolkit, which lets you deliver what you're trying to do in all market conditions, because you cannot control the market. Now, clearly, for the last couple of months, we've had our hands tied to a degree, and that's been frustrating. But moving forward, it's an incredibly exciting time for us all, because whatever happens, we've got options, and I think that's what we want, and I think that's what our shareholders want as well.
Yeah, that's right. And so maybe that segues into I guess what has happened over the last few months with regard to the share price and MNAV. The globally, sector-wide, Bitcoin treasury companies have seen their MNAV compressed since midsummer, and many of them, I think most of them, got to an under 1x MNAV state. I think that was fueling a lot of end of year tax loss harvesting, which was additional sell pressure, which drove MNAVs significantly below 1x MNAV. I think we bottomed at 0.69x MNAV, which again, if we happen to be in those conditions again, I'm almost excited about what we can do now, or once we're hopefully on the London Stock Exchange. But also would not mind if we never revisit that as well. But so that was our MNAV bottom right at the end of December, and since then we've seen the end of that sell pressure from tax loss harvesting, and sort of relief coming back into the stock and back into the MNAV. We reached about 1.2 MNAV about earlier this week or last week, and we're up 50%. The share price is up 50% for 2026 already, which is a pretty darn good start. If you think about how 2025 was a plus 1,200% share price year, yes, there was a big spike and then a lot of pain after that. But from IPO to end of year, share price was up 1,200%. Now we're off to another great start for the year. And that has brought a shift of sentiment that you've felt and I've felt about Bitcoin Treasury Company investors have now remembered that a Bitcoin Treasury Company's value proposition is at least the Bitcoin that it holds on its balance sheet, and hopefully additional Bitcoin yield on top of that, through the efforts of management into the future, increasing Bitcoin per share. And so when you get to the opportunity to buy Bitcoin at 69% of its price, I think that's where buyers were stepping in at the same time that tax loss harvesters were trying to lock that in for the year. And we've seen a swing in sentiment that has brought in a reminder to everyone what the value proposition of a Bitcoin Treasury Company is, and especially what the value proposition of the leading Bitcoin Treasury Company in a significant capital market is, which is, we're in a great position to keep running this playbook, keep delivering Bitcoin yield, keep growing that balance sheet, and then in the future, hopefully get to a place where we can, offer the kind of products that Strategy or MetaPlanet are able to.
Very well said there, Jesse.
I got on a little rant there, so sorry about that.
Well, there's a question that I've got for you on that in a minute. But before we do the question, that brings us quite nicely onto the sort of the different stages of a Bitcoin Treasury Company, and to how we've seen it up until this point. So I think one of the things that maybe I've been criticized for a little bit is the cautiousness that I've taken. So I think everyone can see that we're quite ambitious in terms of where we're trying to be, how we're trying to grow. But, I make no apologies for the caution that I sort of run the business with, because the most important thing for me, and I hope for most of our shareholders, is that the business is successful over the medium to long term, ideally every single quarter, but certainly the medium to long term. And what I won't do is I won't take unnecessary risks, because I don't think we need to, because it's so important that we do everything in the right way if we're going to get to be where we want to be. And indeed, I think one of the reasons why the prospectus was approved, was the effort that we put into running the business in a way that the authorities, as well as all of the advisors, support. So I think it's just all about doing things at the right point in the right time. If we look at the companies, so that's MetaPlanet, Strive, and Strategy, that have got prefs, they are bigger than us at the moment, and that allows them to do different things. So our focus right now is to get bigger, 2 times, 3 times, 4 times, whatever, the size in a similar way to how we're doing it. And then we've got other options in front of us. So that's incredibly exciting. But I don't know whether you want to give everyone a sneak preview of
yeah, that's a good idea.
Of something that we've been working on. I'll give it a slight disclaimer that this is not about the Smarter Web Company. This is just some analysis of the UK that we've been doing. Over to you, Jesse. I don't want to steal the
No, that's perfect. Yeah, as Andrew mentioned, this is something we've kind of been working on in the background. Many people will be familiar with this slide, and then the UK, the pounds version of it here. And we've been trying to take stock of how much capital is in the UK as a capital market, which isn't to say what's the wealth of the UK, but specifically how much capital resides there, whether or not it's owned by foreigners or and also UK individuals and entities owning foreign stocks and other instruments. So all of that added up this is our current analysis and estimate of the UK asset landscape. And we believe there's 46 trillion pounds of capital that the UK commands. And some of these, are somewhat rough estimates in order to keep it in line with the global asset landscape chart. But the main takeaways here, which smarter web investors may be interested in, is that the UK, no surprise, is a highly financialized economy. And so it is disproportionately equities and money, interestingly. So if you can see kind of the relative size of the equities and the money buckets in the UK, they're disproportionately larger. And that's because of the UK's legacy of the British Empire and being, the world's first modern financial hub. So it's still a top 2 global capital market. It's the home of banking for much of the world, and that's where the money number is especially large. But that's also true for equities. There's a lot of capital that is based out of the UK, whether that is UK holders, with money in foreign stocks. For example, the LSE UK listed companies is about 2.9 trillion pounds. So that's the value of the companies listed in the UK, but this also includes the value of foreign stocks held by the UK, and also some other pieces too. But this is the lens we have right now. What's exciting about this to me is that it says there's a lot of capital. It says there's a lot of capital in equities, and there's a lot of capital in the money market and also in the bond market. And that, like everywhere else in the world, the money market capital and the bond market capital is not getting great returns. That's just how it is. If you're in bonds, you're getting 4 or 5%. Money market, something like that as well. And that's where MicroStrategy is making a big splash, because their preferred equity instruments are targeting the fixed income market, the bond market here, and now the money market with Stretch, and they are offering 10, 11, 13% yields, because MicroStrategy believes that Bitcoin will appreciate at 30% a year. And so they're willing to pay the cost of capital of 11% a year in order to get capital, buy Bitcoin with it, and share the upside with their fixed income investors, by servicing those dividend payments as they're structured. And that's what MicroStrategy has now pioneered in the US. Saylor very recently was on a podcast and quite directly said that they, as of now, have no intention to launch these products in the UK. They have done that, and they have launched a product in Europe, but they have no intention to do it in the UK. He didn't explain why, but he has, from his prior comments and from this, these comments, it is clear that he thinks it's a huge opportunity for whichever company can do that. So that's a fair bit down the road for us, but this is our latest analysis that we're excited about, just because it does create, it clarifies just how much capital is in the UK. The reality that the UK is a huge home of capital, and that within that regulatory environment, there is not currently a way to get, for example, Bitcoin-powered fixed income returns. So
also, if you look at the equity slice there, and you assume that just under 3 trillion is the UK listed equities, so ignoring the overseas equities owned by UK individuals, just under 3 trillion. And then you think about where we're heading and the potential for index inclusion, starting almost immediately with the FTSE small cap. And we believe in the not too distant future, the FTSE 250 and onwards and upwards from there. The opportunity is staggering. If you've got a company that's well supported, that can raise capital, that's listed on the right venue, the opportunity is incredible. With the passive flows as well as the medium to long term options that are in front of us. So, when Jesse put this together, we've been talking about it for some time, and it came together fairly recently. This thing that we've been working on, this slide. I was blown away. The chunk of the equities is bigger than I expected. And then when I look at the UK alongside the global landscape, and I look about how disproportionate it is compared with what everyone thinks, it makes it very, very clear to me, and I think most people, that the UK is the number 2 capital market in the world. If you had asked me that question without us doing the work to get the data, or better said, Jesse doing the work to get the data, I would have probably said it's in the top 5. So yeah, the opportunity is vast, and this just adds to the excitement that we've got.
Yeah, that for folks, that was the first question that Andrew asked me once I showed him the numbers. Was he wanted to figure out, wait a second, where is this equities? What's going into these equities, this equity number, and what are the pieces? So I shared my work there, and luckily I had some some solid numbers that comprised the equities piece. But I think that's probably the number one takeaway, is that everybody thinks of the UK as being limited in terms of equity value to what's there on the London Stock Exchange, but that's not a true view of the amount of capital that's invested in stocks and private companies. So this equities piece includes private companies in the UK and private companies internationally. So that's part of how it gets so large. But that's all equity capital. And if Smarter Web can outperform other equity investment options for UK capital consistently, then this is the total addressable market for capital that might be interested in Smarter Web as an equity. Okay, yes. Well, we'll stop that. That's a fun little sneak peek for the folks watching the stream. We hope to put that out in the future. But for now, that's all you get. Yeah. So Andrew, maybe we can walk through the process that everybody who's an investor has been on the outside watching, and from their point of view, it's just all of a sudden now we're talking about our intention to uplist to the LSE. Would you like to kind of walk through what has to happen and what we are in the midst of, and kind of where we are in that process?
Yeah, sure. Well, let's briefly go about it from the start of the process. So you make a decision. It's as simple as that. You decide that you want to list on the London Stock Exchange as a management team, or whatever. You engage with the appropriate advisors for that. There's more advisors than if you were doing that on the Aquis market, slightly, and then you start doing the work. Ultimately, what you're working towards is getting a prospectus, because that's the document that has to go out before that process can take place. The way the prospectus works is you create the prospectus. It does take a lot of time, and then at some point when it's ready, you submit that to the FCA, and they have a formal process where you get feedback, put it back in, feedback, put it back in, so on and so forth. They call it a turn of the prospectus, and then you get to a point at which they say you're clear of comments, which means that it's almost signed off. And then you submit the prospectus, and then you get that back very, very quickly, within hours in our case. And that's the stamped prospectus, which then has to be published immediately. So in our case, call it half an hour, something like that, from when it was approved to when everyone could see it, approximately. When you get close to that point, you can decide to, if you're a public company like us, you can decide to announce that, which is what we did a few days before, because we felt that there was enough confidence then that everything would be okay, in our opinion. And the reason why we also did that then is because you have to put out your notice to leave Aquis in our case, whatever market you're on. And then we felt that we could shorten that notice period ever so slightly, because it doesn't disadvantage the shareholders, in our opinion. But in order to do that, you need to call, in our case, because of the way that our resolutions are structured, our articles are structured, you need to call a general meeting, which takes place next Wednesday at 9 a.m. It's something that people have voted for remotely. It's not like a meeting that will be interesting to attend or anything like that. It's just a formal script that gets read out, a lot like when we did the meeting in December. And then at the end of that meeting, there's a vote. The majority of the votes would come in online, and then the people that would vote in place, which may only be me, on that day. Well, it would be two people because you need a quorum. So there's one shareholder, me, another shareholder who I know will be there. Hopefully they'll both vote in favour of that. And then there's a bit more sort of process that happens behind the scenes that happens between our advisors and the FCA. Alongside that, we have the plans that go into the ceremony. So on the day that you start trading on the London Stock Exchange, they invite you to open the market. I've never been to one of those before, and I'm very much looking forward to going to it. We've invited, obviously the team, the advisors. I wanted to invite some shareholders, so that's why some of you may have seen that we published a raffle earlier where we can then at random pick the number of tickets that we can allocate to our shareholders so that they can be part of the opening as well. On that day, effectively turn up at the London Stock Exchange 7:30 in the morning with photo ID, so they let you in. And then you have the thing on the balcony that people will have seen the photos of. And then the stock's trading on one venue and not trading on another venue. So yeah, I know I've said it a fair few times, but a lot of work goes into that. We're on the home straight with that now. It's just the formalities now. And then from there, you're doing exactly what we've done before, really, speaking to investors, communicating with shareholders, trying to grow our operating business, alongside that growing our treasury function, and sort of progressing from there, really. So yeah, it's a hell of a lot of work, but the whole team have done incredibly well to get us to this point, and I'm really proud of everyone that's worked on it, for the benefit of the share.
It's a major achievement for the company. I'm very excited about it. I'll be there. It'll be actually my first trip for Smarter Web to the UK, is for the uplisting. I'm also excited to be right there in the city of London, right next to St. Paul's Cathedral. I was telling Andrew the other day, I have a very vivid memory from a trip to London 21 years ago, where I visited St. Paul's and was completely confused why there were so many people rushing around in pinstripe suits looking extremely sharp. And I have never known the answer for 21 years. And now I discover, it's because the London Stock Exchange is next door. So those were all stockbrokers rushing around 21 years ago. Now that makes sense. So I'm very excited about coming out for that event and the meetings that we will be having with investors in the city around that, and also the opportunity to meet some of the community at the uplisting itself, and the drinks we're arranging on the side as well. And yeah, just to underline, I think it shouldn't be overlooked or downplayed what a big achievement this is, because this is a bit of a landmark for Bitcoin, for this model, in the top 2 capital market in the world. London is known as a high regulation environment, and very recently, in another high regulation environment in Switzerland, an upstart Bitcoin treasury company was kind of denied access, and they had to change their plans and are no longer launching. So, for Smarter Web to have navigated over the last 9 months to go from, having to only speak about having a digital assets treasury policy, including Bitcoin, to now being able to talk about our intention to accumulate Bitcoin, the fact that we care about Bitcoin yield as a concept, and that MNAV is a part of how people should evaluate these businesses, and that the FCA, the regulator, has approved that and accepted that as a valid thing to be doing, and that Smarter Web has figured out the right way to do that, is, I think, a big moment for Bitcoin in the UK, at least.
Yeah, I completely agree. If people had said to me 9-10 months ago that we would be able to have the prospectus as it is, with not only the operating business, of course, but the Bitcoin aspect of how we run our treasury, with approved definitions like Bitcoin yield and MNAV, and using Bitcoin per share as one of the things that we use to assess our performance. I would have said that maybe one day, but maybe not quite this soon. And everyone's got their own opinions of different things, but my experience with the FCA has been first class. I've been really impressed with how they've looked at what we're trying to do and the questions that they've asked. They asked the questions for the right reasons. They are just trying to regulate a very important market, to protect investors. So it's right that they are tough, but they've been open-minded, and they've listened to what we believe in and how we think a modern business should be structured. And yeah, I've been actually very impressed with them.
I think it probably also helps when our advisors and the team led by you, Andrew, put together such a thorough and excellent prospectus document for them to be considering. For folks who haven't seen our prospectus yet, which is now published in public, you can go find this document on our website, and you can look through all the details of what Smarter Web is proclaiming itself to be, and all the guts of financial information, and also our strategy and governance composition as well. So it's quite a long document. We won't go through it here, but suffice to say that it's available for folks who want to go through all of the nitty-gritty on their own. Great. Okay, so maybe now would be a good time to transition to, so the uplisting is happening. That's a very exciting time. Oh, I'll also kind of toss in that we are going from an environment, the Aquis market, where we have been about 60% of the traded volume during the time that we've been listed there. And we're now going to a market with $2.9 trillion of capital listed there, and a lot of volume, and we will be a tiny portion of the volume. I think that should be a big deal for the company, for access, really, for global capital, UK capital and global capital, to Smarter Web company. And hopefully allows us to have considerably more trading volume. It also happens to coincide with an interesting new initiative that the FCA has approved of having no stamp duty tax for LSE listed companies for the first 3 years that they're listed, which will apply to us. The details of how that is implemented and tracked, surprisingly, still kind of being formed, but that is already in effect, and a very good thing for us, because we are a high volatility stock, in a good way. Traditional, TradFi is afraid of volatility because volatile days tend to be negative for traditional equities and traditional bonds, which is to say that, if you have a big move, it tends to be a down day. It tends to be a move down. But for Bitcoin, it's the opposite, where you have your histogram of daily returns, sort of a bell curve, and then you've got a cluster of really, really strong positive days. So it's a fat tail to the right, and that's great. That's what that's the holy grail, really, is something that where volatility is a good thing. And the more volatile, the better. In that case, you want big moves if the moves tend to be to the positive. Bitcoin has 30% annualized vol. Right now, Smarter Web has about 110% annualized vol. So we are considerably more volatile than Bitcoin. We are not correlated with Bitcoin, but because it's a Bitcoin strategy at its heart, it's good vol in the same way that Bitcoin is good vol. So all that to say that Smarter Web, I think, presents a pretty unique value proposition to London capital markets, where we are considerably more volatile than any of the other companies in the FTSE 250 or 100, and that volatility is good. And there's also no taxes on trading our stock for the next 3 years. So hopefully those conditions are appreciated by some cohort of capital in London, and puts us in a unique position to be attractive when many other companies don't have reason to be interesting to traders out there. So some other thoughts on LSE before we move on. But yeah, now we can sort of move on, Andrew, to, I guess, would love to get your perspective on Bitcoin treasury companies in 2026, and Bitcoin at this current moment, maybe a little bit of reflection on the last 6 months, and sort of thoughts on, where we're at and how the market is shaping up right now.
Yeah, so let's start with Bitcoin treasury companies. So as we all know, the last few months, the last quarter, just longer of last year, were tough for Bitcoin treasury companies. If you look at us as a good example, ignoring the share price side of things, this week is the first week in almost 3 months where we've announced a purchase of Bitcoin. That was a long gap because of the access to capital, effectively. So all Bitcoin treasury companies have found it tough. All of them, as far as I'm aware, have taken a hit with their share prices. And most of them, the smaller ones, the medium-sized ones, basically everyone that doesn't do prefs, has found it very difficult to buy meaningful amounts of Bitcoin over that time period. There's lots of reasons why that all happened, probably not needing to go into them all at the moment. But looking at the positive, what we believe is that we're coming out that other window. If it's every now and then you get a bad 3 months, then that's not a bad sort of cycle to operate in. So over the next couple of years, we'll have to see how those cycles materialize in terms of that. What I believe is that Bitcoin treasury companies that have got a reasonable history of delivering Bitcoin yield perhaps won't get treated so badly in that scenario. Taking that in the context of what I said earlier about companies like ours do have options in a good and a bad market. So we'll see how that one plays out. If I look at strategy as an example, they're from the start, 5 and a bit years ago. Premium, quite a long discount. Premium, dependent on who you look at, and now close to a 1. My personal opinion is I don't think they went below a 1, but I've seen some people say they have, and you can slice these things up however you wish. So maybe that's the sort of the cycle, and if that's as bad as it gets, you go down to a 1 in the bad times, then we can probably live with that. With the upside potential that is on offer. So I think we're probably one of the first Bitcoin treasury companies, all being well, to start buying Bitcoin again, because we believe that the capital is flowing again. And obviously there's no guarantees what happens in the very, very near future, but everything's looking good from where I'm sat. And then if we go on to Bitcoin, so probably quite an unpopular comment I'm about to make, so cover your ears if you don't want to hear it. I'm kind of glad that Bitcoin put in a negative year in 2025. If I look at what we achieved in 2025, when Bitcoin was flat, down, slightly up, dependent on which part of the year you're looking at, let's call it flat, just for argument's sake. We achieved a lot. We went from almost 0 to over 2,500 Bitcoin held. If we can perform like that when Bitcoin is not helping us out, bearing in mind that Bitcoin is our treasury asset, then imagine what we can do in a good Bitcoin environment. Now, my personal opinion, and that's all it is, a personal opinion, is that Bitcoin's going to have an incredible year this year, for lots of reasons, not just because it had a down year, more the fundamental structure of Bitcoin in terms of why I like Bitcoin, which is basically a fixed supply and no one in control of it, overlaid with the thing that I don't like to like, if that makes sense, which is the mess that the world is becoming. And it's a perfect environment for Bitcoin, as much as it troubles me to say that in some ways. So, with my belief that Bitcoin is going to have a good year for lots of other reasons in addition to that, and the way that we're structured and what we did when Bitcoin wasn't really doing anything too crazy, I think it's pretty incredible. The only other thing that I would add is, let's say that this was, the dip in Bitcoin, 25% off the all-time high, something like that, which is nothing compared with what we've seen in the past. Now, if that's as bad as it gets, Bitcoin dipping 25% as it goes to $1, $2, $5, $10 million over whatever time period it does, if you believe that, which not everyone will believe, it's pretty good.
Yeah, I would take that. Yeah, I think that's right. That increasingly, I kind of have the view that we may have just had a bear market for Bitcoin, and it might have been largely absorbed by Bitcoin treasury companies, in particular Strategy. It's well known that Strategy has incredibly deep options chain. The liquidity there is pretty incredible, and if you were trying to play the sort of 4-year cycle, a very good way to go about it would be to short MicroStrategy via options in order to hedge your position if you're long Bitcoin, if you're a Bitcoin whale. And it seems like that may have been going on over the last 6 months in particular, in which case, MicroStrategy's stock takes a lot of the brunt. And then downstream of that, is Metaplanet, which has had a pretty huge compression of MNAV. And then, the smaller Bitcoin treasury companies beyond that, like Smarter Web, feel an even more amplified version of that compression. Incidentally, also, it's a bit of a tangent here, but we are excited to be attending Strategy World coming up here and Andrew, you'll be on stage there on a panel. It seems to us, or to me at least, that Saylor has kind of handpicked a few Bitcoin treasury companies that he particularly likes in capital markets, that he finds particularly attractive, that Strategy does not intend to compete with, and has invited those companies to participate in his event. So you'll be on stage with folks from Metaplanet, Capital B, and Orange. So Japan, Europe, and Brazil, and the UK. It's kind of in my view, a somewhat telling handpicked bunch that I think he did quite deliberately. So we're excited about that. We're excited about Saylor's continued support and enthusiasm for smarter web and the UK capital market as an opportunity. But yeah, I agree with that view of Bitcoin. It's quite possible that we're in a fantastic position for 2026 from a Bitcoin perspective. For me, the big story is gold and silver have been running hard, and Bitcoin has lagged. And on Twitter, you start to see a lot of precious metal fans, gold bugs, dunking on Bitcoiners. And certainly, I've noticed the uptick of taunts from gold fans, and that is a good sign, frankly, because Bitcoin will not always outperform gold on every time frame, but in general, it will outperform Bitcoin and gold, in my view. And so I think we're probably due for a rotation, because the world continues to misunderstand Bitcoin and believe it's a risk-on asset. It's not a risk-on asset. It is a neutral reserve asset for the digital era. It is gold for the digital age. And so if the value proposition of gold and silver makes sense to global capital right now, wait until until the mechanics of Bitcoin continue to tighten, and new supply issuance continues to go down. With the silver rally in particular, it's funny because silver is one of the commodities that when the price goes up a lot, it becomes economical to turn back on a lot of mining operations around the world. So supply will increase in reaction to the price going up. And that, of course, will eventually hammer the current market price of silver back downwards as that supply comes online. Not true of Bitcoin, obviously. That's a big part of why we're here. But I think that backdrop is very good for Bitcoin. And that is very good for Bitcoin treasury companies, because you and I talk about this a lot, that a big part of the reason I'm confident that sentiment will always cycle for Bitcoin treasury companies is that sentiment cycles for Bitcoin. And when people are enthusiastic about Bitcoin, when they want more of it, what do you turn to? What's the best way to grow your Bitcoin ownership? My belief is the best way to grow your Bitcoin ownership is through a well-run Bitcoin treasury company. And when people are thinking in those ways, it makes sense to pay a premium to participate in a company that is running that playbook. And that, creates the MNAV premium, and then begets, more yield, and that begets a higher MNAV premium, and it's recursive, it's reflexive, and it is also recursive and reflexive in the other direction when conditions change. But what we're talking about is cyclical fundamentally there. There'll be good times and bad times, but there overall will always be, over the next 20 years, a desire for people to grow their Bitcoin ownership, because Bitcoin will continue to win and will continue to prove itself as the best asset for the 21st century. And people will feel late and they will want more Bitcoin, and we will be running our playbook.
Also, when you link into that, all of the passive flows as well. So let's say you're a UK mid-cap manager, for example, or even you've got a mandate over the whole of the UK in terms of equities, you'll be benchmarked against an index, FTSE 250, FTSE 100, etc. So if there's stocks in that index that are outperforming that index because they've decided to build their balance sheet on the best asset that the world's ever seen, then, it's not just the passive money that can potentially flow into your company. It's the active managers that get forced to buy you, whether they like it or not, because they have to keep up with the performance. So there's an awful lot to be excited about. And, if you've got to give it to the silver and the gold bugs for 1 year out of, I don't know, 20 or whatever it is, then, I think that's pretty reasonable,
Yeah, we're doing okay. We're doing okay as an asset. Great. And just to sort of looking at my notes to sort of a couple topics to wrap up on. Let's address the sort of Bitcoin yield quarter to date, and also the related question of, okay, you guys recently raised some capital through the ATM style instrument. How are you thinking about that, and also in the context of uplisting?
Yeah, sure. So if I just explain how the maths works, that's probably the starting point. So when we raise the money through the ATM style facility that we've got, we effectively sell some shares and we get some money. When we announce that on a Monday morning, normally, we put the shares into the fully diluted calculation, and so we've increased the shares and the Bitcoin has remained static. In the cash that results from that is effectively held in the business, the group, and then it's used for, whether it's for growing the operating business or for the PLC costs or put it into the treasury or a combination of all those things. Then if we look back at the announcement that we just made, we moved a certain amount of money into the treasury, and we bought Bitcoin with it. So what you get over that event is, at the start, you effectively get a hit on your Bitcoin yield. So when we're starting at 0, it went down to, I think, 0.8 or something like that, 0.83 from memory, minus 0.83. And then when the Bitcoin purchase was announced, it went up to around about 0.5%, so negative 0.5% at the moment. And obviously we can't say any more than what's publicly available about exactly how much cash we've got, but that's how that works. So if you think through capital raising strategies, obviously the higher the MNAV, the easier it is to generate that positive Bitcoin yield. But then there's things that you can do on the negative scenario as well. So it's all transparent. If you look in the prospectus, you can see that our listing, which is good value, if you try to find another main market listing that's done for £1.5 million, I think it might be quite difficult. And most of the ones that I've looked at are considerably more. So things like that, clearly we've got, a way that we run the cash in the business in addition to the modest revenues that come in, to manage that side of things. But, some of the cash is used for things like that. I think if you look at the benefit that we'll get from the LSE move, then I think that, £1.5 million is easily worth, that investment. And as it's too short a window, but if you look at the share price, you can see the value versus the.
Yeah, as you've pointed out on another podcast already, it's a good lens to look at it is that it's already delivered quite a bit of value. That just the announcement that we're very close to that point in time has brought quite a rally to the stock, and it added £100 million of shareholder value. So if you think about it in those simple terms, it's already been an extremely good return for shareholders. Sorry,
I agree.
Didn't mean to cut off any additional thoughts you had there.
No problem. Just because I'm conscious of time, it might be worth just briefly mentioning the conference that we've announced as well.
Yeah, that's what I was going to wrap our final point with. What do you want to say about upcoming events? We've got very, very minor general meeting coming up for the move to LSE. We have then the uplisting, which we're targeting the 3rd of February for, and some events around that in London. Then we've got the annual general meeting coming up on the horizon, and then our recently announced collaboration with Bitcoin Treasuries Media, that's Tim Kotzman and Ed Julien, for the Bitcoin Unconference in May 29th in Bristol coming up. And so anything you want to say about any of those events and where people can find out more about those events too?
Yeah, sure. So the meeting next week is a formality, and all being well, that will be announced very shortly after the meeting, on the same day, with the percentage voting, and how that's split. The AGM, we're going to hopefully have a few, well, maybe more than a few shareholders come to it. So that will be announced in due course as well. I'm hoping that will be in March, because it's a statutory thing when the AGM's got to be held 6 months from the year end accounts out, within 4 months of the year end.
We're planning in Bristol for that too.
Yeah, we're going to do it at the Concord Museum again, because it was a good venue for that sort of a thing.
And I look forward to going to that one.
Yeah, it'll be good, and you can have a look around Concord as well, another British and French engineering success story. So that'll be good. I'm really looking forward to going to Strategy World. I think it's one of the best events on the calendar, and I'm delighted that we were invited to talk there. That's humbling. And I'm looking forward to talking around your new UK landscape slide, in addition to a few other things there, because that's our bit. We'll be talking about the UK opportunity and what we're doing in the UK, and we've got some good slides already prepared for that. And then, of course, the Unconference. So we wanted to do an event, specifically around Bitcoin Treasury companies and what we're doing for a while. And then the opportunity came up, and we were chatting to them a while ago. They wanted to do something in the UK, because they're trying to do stuff globally. We wanted to do something, and it was an obvious partnership. So we said, well, let's organise it together. I selfishly said, why don't we do it in Bristol? And no one overruled that one. So that's where it's happening. And then we've got some support from some amazing speakers. The idea behind the conference is that we have a really good day of content. I've got a rough agenda with all the different speakers, although we have had some more speakers, some not yet announced. And I'm trying to make sure that the day is a brilliant day of content with a mixture of keynotes and panels. And then we've got some support from some amazing sponsors. Quite a few of those have actually reached out, potential sponsors, since we went public with that on Monday, I think it was. So that's good. And yeah, I'm hoping it's a good day, so that then we can build on that into the future. And I was very keen that we can use it as an opportunity for all Bitcoin Treasury companies, both private and public in the UK, and then a group of our friends from the global stage, to bring their perspectives into it. We'll have to wait and see how it goes, but I'm hoping that it will be a great day, and we're going to certainly do our best to make it enjoyable for everyone.
Yeah, it was. We obviously went to the inaugural one in New York City. It was a phenomenal event, great format, just kind of in the round there with the audience and the stage right in the middle. And the programming was excellent. And obviously, New York City is the world center for capital markets, but the UK is number 2, as we know now, in particular. Through this analysis, the UK is the second most important capital hub in the world, And this conference will be a the second edition of in a location of the Bitcoin On conference. I think it's fitting it'll be in the UK, and it will be a celebration of Bitcoin in the UK. So I think we're striking a nice balance of inviting in everyone who's doing interesting things with Bitcoin treasuries and Bitcoin in general in the UK, and then also getting international perspectives from our friends in the Bitcoin treasury landscape internationally. So really looking forward to that. I think it'll be a big event for Bitcoin in the UK, and of course, in particular, Bitcoin treasuries as a concept in UK capital markets. This is going to be kind of a landmark moment because nobody's done a conference in the UK about Bitcoin treasuries, and I think it will be a mega trend that will continue to play out over the next couple decades. So this will be a cool event to have been at the very start of Bitcoin treasuries in the UK.
And in terms of the tickets for that, if you did want to buy one, you can use the code OFFER10, and that will get you 10% off. The VIP tickets, where you get invited to a dinner in the evening with the speakers and the sponsors and other investors, those tickets are selling quicker than the non-VIP ones. So if you want to buy a ticket, visit our website. It's really easy to complete the form there. And we look forward to seeing you there.
Great. Okay. Yeah. Well, I guess we'll end it there. This was our first live stream together. I've never really been in this role. So folks, let me know how I did, what I can do better next time, and we will plan on doing more sessions like these, probably once a month, maybe every few weeks. All right. Thanks very much, everyone, and